Let's pick this up with Giles Keating. He joins us from Bitcoin Suisse, where he's a director. Good morning, Giles. Let's wade straight in on this then, because there's good inflation and there's bad inflation. There are good reasons for Treasury yields to rise and there are bad reasons for Treasury yields to rise to do with issuance. Can I get your take on this? How worried or otherwise should equity markets be about the 10-year yields rise?
Yeah, look, I think not worried at all. This is a normalization. It seems very likely that 10-year yields will go up significantly more, easily, I would think, breaking the 1.5% level. There may well be just a taking of breath in equity markets as that happens. But fundamentally, this is a normalization. It's a sign of growth. It's healthy.
If we look at the forward yield on the S&P, Giles, it's only 1.5%. If we get the 10-year Treasury yield beyond 1.5%, what are the implications for the S&P and interest in owning equities?
I think, to my mind, the normality is equities, your total return is based on dividends and, of course, on future capital growth. And therefore, it's completely normal that you have a lower dividend yield. You still have a higher potential total return on equities. So, as I say, I think as you have that kind of crossover, yes, I think the equity market will take breath. There certainly can be a modest setback. And in fact, last week you saw a little bit of that in stock markets. And I think the other thing is clearly trying to take out of the growth stocks into the value stocks. Didn't really happen. Maybe there is a bit more of that coming up. Maybe the tech stocks do pause for breath themselves and do underperform the general market a little bit. We heard that news about Caterpillar as an example of a stock that will clearly benefit from recovery. So I think that's all part of the story here. But the idea that there's going to be a really major reset of equity prices, I just don't buy it. And I think the trend in stocks is still up for this year.
Giles, though, as we talk about some normalization, there's a fear out there that you have seen pockets of bubbles, whether that's in the crypto space, from Bitcoin to the SPACs, so these special vehicles where you're seeing listings take place. Do you think some parts of these markets, away from the technology thing where we have seen that rapid acceleration as well, do you think Bitcoin and SPACs could see some impact if there's a sort of letting out of some of the hot air or the excess in markets around this normalization phase?
In crypto, in Bitcoin, it's quite natural to have setbacks of 10, 20%. Bitcoin's already seen that once this year. And highly likely we'll get that kind of temporary setback again. But I would not see that breaking the trend. I think the trend in Bitcoin remains strongly upwards. And that's all to do with greatly increased institutional interest, which has been very big these last several months, but is still only just beginning. There are lots and lots of institutional investors still who want to get into Bitcoin. And I think when you do get those small setbacks in response to perhaps a little bit of concern about the higher interest rates, you will actually see that being used as a buying opportunity. And again, I think Bitcoin will end the year strongly up now.
Giles, we're seeing a strong commodity play again this morning. Commodity currencies have risen. Commodities themselves, copper, for instance, has traded up to a 9-year peak. We've seen oil prices jump along for the ride, a 22% bounce in Brent so far this year. Do you have any concerns that if we are seeing a releasing of some of this excess in the markets, that commodities actually face a little bit of a short-term setback?
So I think the oil movement is obviously very, very much influenced by a lot of short-term factors, including that terrible freeze in Texas, which has exacerbated that. If you look at the oil futures curve, obviously it's in quite severe contango. So the market is telling us that a lot of that will fade out over the coming months. Copper, I think copper's a bit of a mixture. I think it's partly gone up in response to the higher oil prices, because of course copper is very energy intensive to mine that. But it is partly a positive sign, reflecting the stronger growth. And I think those, as the oil price unwinds a bit, but as the economic growth story stays strong, gets stronger, I think copper will be pulled in both directions. So I don't think that will be so much of a one-way ride. And I don't think we're going to see a real explosion upwards in copper prices. But I think perhaps with some up and down, that can perhaps end the year modestly up, even from where we are now.
Giles, good morning to you. You're a director of Bitcoin Suisse AG, AG. Do you get paid in Bitcoin?
I certainly have had a number of very nice meals, Steve, where we have paid for the meal in Bitcoin.
Yeah.
But at the moment, I'm paid in Swiss francs. But although I wouldn't want to say too much, I haven't been averse to putting a little bit of that into Bitcoin. But Steve, ultimately, the use case for Bitcoin, I can see exactly where you're coming from. It is not so much about a payments method, although there will be a bit of that. It is as an investment vehicle alongside currencies like Ethereum and Polkadot, which really are about being used not as a payments mechanism, but as a form of the new financial economy, of oiling the wheels of the new fintech.
So Giles, let me just get something confirmed. You now, of Bitcoin Swiss, are saying that Bitcoin should not be used as a payments mechanism.
I'm saying it can be and it will be. I have used it. Many of my colleagues at Bitcoin Suisse have. And we have an arrangement with one of Europe's largest payments providers to allow clients across Europe to use it as a payments mechanism. But the idea that it's going to take over from fiat currencies as a payments mechanism, we would never say that.
Do you believe it will remain incredibly volatile as it has been, Giles?
I actually think it will dampen down as more and more institutional investment comes in there, more and more long-term holders. People talk about it as a speculative asset, but I actually find that very ironic when it's been the longer-term investors who've been coming in and driving the price up. So sure, I think we'll still see a fair bit of volatility this year, but if I look forward over the next 2, 3, 4 years, as more and more Bitcoin is held in the hands of longer-term investors, I think the volatility will come down. It'll still be there, but nowhere near as intense as it has been in the past.
Giles, I was going to ask you about the trade-off with gold, because many have noted as yields have risen, gold as a hedge is losing a lot of its appeal. Is there a trade-off where Bitcoin holds up a little bit better amid rising yields than gold at this point?
I think the rising yields at the margin have a very slight negative effect on Bitcoin, but it's so slight you'll barely notice it. I mean, after all, 1.5 yields are still very, very low, 1.5% if we get there in the 10 years. Even 2%, I'd say the argument still applies. And I think another very important point, most or many of the institutional investors who are buying Bitcoin are also buying other cryptocurrencies like Ethereum, and they can stake those currencies and get yields of 10%, in the case of others, as much as 15%. So the yield that you can get on your broader cryptocurrency portfolio is still way ahead what you would get on either bonds or equities in the conventional world.
Mr. Keating, I remember a time when you would be very dubious about anything paying 10 or 15% in a zero interest rate world. But we've got to leave it there for now, Giles. Enjoy talking to you today. Thank you very much indeed for that. Giles Keating, Director of Bitcoin Swiss, AG.